The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I have an important announcement here for all of our listeners at TFNN. There's going to be a vote in London today. In fact, they're voting right now to decide whether they're going to stay in the euro or not. This is a flash news announcement, so you might want to check with your local radio and TV providers to see if there's any information on this. In fact, it's about the only break we get from the election stuff. So let's try to hope that they keep this election thing in Britain going on for another 3 or 4 months. Okay, there is the reasoning for that is I wanted to show the what's happening with the British pound as from a technical basis. Remember, these are all about charts, folks. Have nothing to do, with the votes or the fundamental information or anything like that. These are just patterns that I'm looking at. But I wanted to show you the two areas of potential resistance that we're going to see here. Remember, this is a long-term bear market. All we're doing now is having a really good correction that started in February, and I think we're culminating it. Right now, we're trading at around the 149, just under the 149 level in the pound. Under the pound, and we could get to the 150 level. That's the 1.27 expansion of the last swing. It's also a 61% retracement of the high from last August. And if it gets really crazy, we could make a 1.618 expansion all the way up to 152.50. So those are the things that I'm looking at. You've noticed how we've been very, very strong here for the last 6 or 7 days that we focused on the first chart that we had here in the den when we were down at that 78% retracement level at the 140 level. And now the whole world wants to buy it. Up here in the 149 area would be my guess. So I will be looking to do the other side of that trade. But, you want to wait until the vote is out. When the bookmakers start telling you that it's 8-1, 4-1 in favor of them staying, you can almost take the other side of that because the only way they can get people to take the other side of that bet is to tell them that it's pretty much a dead-on lock. And so what they do is they bet on the fact that Britain is going to stay, and therein lies the rub. No one really knows how the vote's going to go, folks, but we'll see, what's going to happen with it as we move through, some of these things that we're looking at. There's a lot of stuff to cover. Last night, the German DAX got a little crazy, but before we get into that, I need to show you what I think happened last night in the S&P E-mini. You'll notice we had that ABCD pattern that formed back on the 20th, and we backed off to that real critical support level at the 2074, and as you'll notice, it hit it 3 times. Hit it on the 21st, the 22nd, and really late yesterday, and then of course the market gapped up, and that was primarily due to what they were expecting in Europe with the German DAX. They had a pre-market call of over 150 points higher in the DAX, and it is in fact what it did do. It went a little bit higher than that, as a matter of fact. It's been a very, very strong market. As we pointed out since early in the week when we were making that beautiful Gartley pattern in the German DAX down there at 94.20, and now, folks, we're trading at nearly 103. So this thing has ran 900 points, and at $2,500 a point, you don't have to be a big mathematician to realize if you catch a couple of those, you're able to eat out once or twice a month. So that's the main thing. Now, I wanted to cover a couple that are not working the way that I thought they were going to do. In fact, these were losers. One was this copper. It has continued to go higher. It got above, it should have stopped at 214. We've got up to 215 and change. So I will have to reevaluate that at another time. But there's even one more important than that that is hanging on by a thread, and that is this corn chart. I wanted to give you a little heads up here on Christmas corn. We've got all these down bars, which are the first you see last Friday, and then Monday and Tuesday. You can see how badly these markets were hit. And now we are setting, we broke the 20-man line. It should have stopped at 399. Excuse me, should have stopped at 403. We didn't stop at 403. We've got down to 398, which is the 61% retracement of the low from April the 4th. We break that, this whole bull market in corn is probably over. You'll notice that on this corn chart, you also have a 135 pattern. That's the pattern that the Longstreet boys liked. And you'll notice you have the higher bottoms coming in at the 61% retracement. You have a nice cycle bottom that is about 5 weeks long. And so this is what, if you want to buy corn, this is the time to do it. Now, you become a farmer. That's really what you're doing. So you don't have to own the land. You don't have to buy the seed. You don't have to go to the bank to pre-sell your crop or to borrow money for expenses or anything like that. You can just buy a contract of corn, 5,000 bushels. It gives you about 110 acres, as I recall, and that'll put you into the farming business. And if you don't like it, you could be out of the farming business 15 seconds or less later. So the thing is, if we go below, we're trading at 398 right now, 398 and change. And if we get below the 395 level, my assumption is this is probably going to be a trade that is just not working at all. And then you've got to just stand aside to see if that's going to work at another time. But that's just the numbers coming together is what you have, moving on. Now, we also have another market that is, everybody, loved it a few days ago, and now everybody hates it, and that's the Treasury bond market. And if I can just find the Treasury bond chart, I think I'll be in good shape. But right now, I can't find it. Oh, this is really frustrating when I do this. Oh, dear. All right, I'll put it up here in a minute. Let's just not worry about it. We'll start out with the German bond. You can see in the bond that we've broken down. We've actually got down to below the 164 level in the German bond. And I'll find this chart on the Treasury bonds. Doggone it, where is the darn thing? I know I got it here somewhere. There it is. Hold on. It doesn't take me very long to catch it. I might be slow, but I'm still in the game. All right, this is the Treasury bonds over the past couple of months. You'll notice the two shooting star candles that we had, signifying a potential high. We had the double top up there. We also had the butterfly pattern. And now we've come down and we've hit the 166 level. We should have stopped at the 167 level. That would have been an equal move like what we had during May and June. But we went below that, which telling you the market is something has changed. And I think what's changed is we hit the mother lode, a glory hole. I don't know if you know, folks, what a glory hole is, but if you've ever been into gold mining, a glory hole is when a tree gets hit by lightning and it splits open and pulls apart, and there's all kinds of nuggets in the bottom. Okay, and that's what I think this one is. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're going to switch over to gold and silver now because we're completing this big ABCD pattern that finished at around 1262. We've had three $10 rallies from the 1262 level over the last 24 to 30 hours, but it still keeps hovering around that level. We're trading around 1264 right now, and if we go much below the 1260 level, of course, we've had this other pattern, the longer-term pattern, which is the 61% level in the gold that would really make the market look like it could go even all the way down to 1255, which I think would be a really good spot because, that's a 61% retracement in a market that is extremely friendly to these Fibonacci numbers, and so I would say that would be pretty good. But I think it's got a chance of holding the 1262 level. We've been down to 1259.80 early this morning when it was rather thin, and now we're trading around 1264. So we still got a chance, for this market to hold up. The silver market has actually done a little bit better. It's actually held up. Just 1 second here. Boy, I write these down. I've got them categorized. They're right in front of me, and I still can't find them. Hold on just a second. There we go. I just got to be more patient here. Okay, just a second here, and then we'll put up the silver chart. You'll notice here we did have a really strong rally off of that 382 retracement. We rallied 50 cents an ounce. That took us up to a 61% retracement of the high we made on the 20th, and it was a 50% retracement of the high from the 16th. And what we've done now overnight is we've come down and we've tested the 786 retracement another time. Now, when gold was making a new low at the 1259.90, the silver was not. Silver had not taken out that 382 low at $17.12 per ounce as of yet. Whether that means a whole lot, I'm not, totally sure. What they're doing here is that they're talking so much about this Brexit stuff that they just really they're doing exactly the same thing that they did with us with the Greek thing. It's just amazing that this happens the way that it does, and it's the reason why I'm a technician and I don't follow the news or the fundamentals. I mean, it's just, well, anyway, that's just the way it is, and what are you going to do? Anyway, someone's asked a question about the S&P that I posted in there at the 2102 level. That was a perfect 786 retracement. It was also a 1.618 perfect expansion of the previous move that we had. I'll put this up so you'll be able to see it. And but it's got a lot of resistance up there, folks. So if you wanted to do something that would probably be a good place to trade would be to sell against that level, and then of course it gets above 1206. I would think that you're probably wrong, and believe me, there will be a lot of activity starting at around 7:30 New York time tonight, because that's when the official votes start to come in, and I think they said by midnight that it'll all be over. So it'll be one of those things where you'll probably, if you like trading, like I like trading, you'll probably be up quite a bit during the night. Yesterday, I don't even remember what happened because right after the show, it was it for me. I went to bed, if you won't believe this, at 4 o'clock in the afternoon, and I didn't wake up until 5 o'clock this morning. And I don't sleep 11 hours very often, but I sure must have needed it. Okay, there's another factor that goes on in foreign exchange that I think we should discuss a little bit, and that is the fact that, we have a lot of cross rates. And one of the big ones that they're looking right now is the euro versus the pound, because this is the one that is really the Brexit one. Now, if you'll notice here, we had that really strong rally here in the euro versus the pound just 2 days ago. It stopped right at a 61% retracement, and then it backed off quite a bit and is continuing to do so. This is telling me that no matter what happens to this vote that's over there, it's negative to the pound or to the euro. So in other words, the euro should lose to the pound. Now, if that's not going to be the case or not, but that's the way, if you wanted to hedge your bet, the best way to do that would be to do the euro pound cross rate. In other words, go long the euro and short the pound. And you got to do it. Try that again. You want to go short the euro and long the pound because you think this chart would be heading lower. So the euro is the lead one, so you want to be short that. And then the pound, you'd want to be long that one. So that's the way it should be done, and based on the charts. And that's all it is. It's just based on the charts. Nothing else. Nothing else on top of that really matters. So a lot of things happening. We've got the bonds right at the 61% retracement, and folks, this looks like a very negative situation in the bonds long term. It just really does. I wanted to share with you a long-term possible scenario in the euro, and that is, since we were talking about that cross rate, you'll notice here that you see that a small ABCD pattern on the right, not the large one, but the smaller one. We hit that last night. We got up there to 114.20, and so far we backed off about 20 pips from that level. So it did complete that ABCD pattern, but there's a possibility if things get really crazy that the euro could get all the way up to the 119 level. That's not going to get there overnight. Well, it could get there overnight, given as crazy as these markets can be. But this is a really nice ABCD pattern that completed last night in the euro at that 114.20 level. We hit almost the 149 and change level in the British pound, which was also got to 149.50. The 1.27 on that was at 149.70. So that was very, very close also to be watching it. So these are just some of the things that going on. There's a lot of stuff happening. Part of it's due to the fact that we've got this vote over there, but that's just the news. I think they do these votes to get the financial news people to get more listeners, because they get me listening. And when they get me listening, they've really accomplished something, because I just want to see how the markets are reacting to the news. I don't really care what the news is. I just want to see what the reaction is. Because remember, folks, if you have a really bullish action and the market can't go up, trust me, it only has one place to go, and that's down. And if it's really bearish action and it starts to go up, it only has one place to go, and that's up, because all the selling's done or all the buying's done. And that's the sum total of what you're looking at, when you're reaching these things. So we'll see. Now, we hit the exact 61% retracement in the bonds at 166.01. We're trading at 166.12 right now. That should be a pretty good bottom. We're down 5 days from the high. We made that high last Thursday, and so we're down into this level. And as John Logan said, tomorrow is Friday, and so it's going to be a wild day. We'll watch that very, very closely. John Logan has some great information, folks, because when he tells you that bullish markets go higher and bearish markets go lower, he's telling you a lot of information. So if you're trying to pick a top, you better have a darn good reason for doing it. Because, in other words, if you're saying you can hit the top, you're hitting the exact price. That doesn't happen. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked to take a look at the chart of Deutsche Bank. I showed this pattern just a few days ago. Of course, as you can see, it was at the 61% retracement. This market's got all the way up to, it's trading this morning at $18 a share. And that just shows you how, the emotionalism that's going on in the German market is carrying through to just about all stocks. Now, with what the Deutsche Bank is doing right now, if you'll notice that the move between April the 4th and April the 25th, it's doing the exact same thing. In other words, it's moving 4 points off the bottom, and that's exactly what it's completing right now. That'll be a 61% retracement of the high for March. If I had to do anything, I would be short Deutsche Bank into this Brexit thing, but I'm not in. I don't have to do anything, so I'm going to wait. I have scheduled my resting and stuff for today so that I'll be able to be up during the night to take advantage of some of these things if we get some extensions, and that's what I'll be doing. I will not be looking to put an order in at a high price, like at the I would sell the pound if we got to 150, 152 area. I would do that. You'd have to risk over 100 pips at that point, but that's a bear market, and that's a 61% retracement of the high from last year. So I'd have to do that one, but that's about the only one that I'm looking at. I'm involved in the gold market from this 1262 level, and my stop is right below 1255. But whether that's going to work or not, we'll have to wait and see. And I'm short just a few of the S&P here at this level we hit at 2101 last night, because it being the 60 or 78% retracement of that level. So we're going to have some wild swings no matter what. Now, I wanted to share with you, since we're talking about money when we're dealing with this, and we're talking about currency, we really need to look at the U.S. dollar index. And you'll notice here that we have a Gartley pattern in the U.S. dollar index. As you can see by the pattern that's listed by the dotted lines there, you see the ABCD pattern coming in at this 93 level. Now, if we get below 92.50 in that dollar index, that would put the euro above the 115 level. This would certainly be a failure, and we'd be looking at another, larger leg down. But we made that perfect ABCD on May 16th, and now we're having the first ABCD correction, and that's what Gartley said, is to buy the first ABCD correction in the new bull market. And if this is the end of the correction that started in November, then this is what you'd want to be doing. And you certainly got all the news. I mean, you've got things are coming in out of Europe and Scotland and Ireland and every place else about who's voting for what and why. And but these are some of the things that we're looking at as far as these patterns. Just a lot of patterns that are coming together at the same time here today, and that's the key thing, to keep an eye on. Okay, well, the corn is still held at 398 level. That's a 61% retracement. Anything below 395, that's about 3 cents from where we are right now. I would think we would be probably wrong on this, because this market follows the numbers pretty nicely. And but there's still a chance, because the beans have a tendency to drop another 20 or 30 cents really quickly because they've not held very well at their levels also. So there's a combination of a lot of things happening, and the same thing is true with the wheat market. The other market that really I was going to have Rich Anderson on today, and he frankly said I could do it tomorrow but not today, and that's mainly because he said he was busier than a one-armed paper hanger. So when he's busy, he's busy. So keep an eye on the cattle futures if you like to trade cattle futures, and I know Mr. Z does. But if you'll keep an eye on cattle futures, August cattle have now completed this ABCD here. This is October cattle that we're looking, but August cattle, which are spot cattle, that spot means the nearest futures, have reached that level. So keep in mind that we might be really near a pretty good rallying point here in the cattle market. At this particular point, you never have to risk more than any other time, so you want to watch it very, very closely. So we'll just see what's going in. Folks, I know there's a lot of chatter about the jobs reports and all these numbers. Folks, those people in Washington, they make their living by learning how to massage numbers. That's exactly what they do. I mean, you can see it in the polls that they have. You can see it on how they give us information. It's Jay, you've just spotted it right. They're just flat out lying to you. So just remember that when you figures don't lie, but liars do figure. So you got to remember that can happen. So anyway, that's why I'm a technician. That's I don't keep repeating it, but that's neither here nor there. Okay, how are we doing so far in the market? We've got the stocks are selling off a little bit from their highs that we made up there at 2102. We're down about 8 points, which isn't very much. We've got crude oil rallying back to a 78% retracement of the high we made yesterday. That was pretty much right on at $50 per barrel level in August crude. And we'll see if that holds up a little bit. Now we have first indication that corn's in trouble because we just made a new low on the day at 397. So at 395, I would say this is no good. So that's what I would be watching with that. The gold is holding up, but not by much. It's trading at 1264. And silver's still holding up too, but still it's quite early in the day. This is all going to be rectified by tomorrow at this time because of the vote being, that's what they'll use as the excuse, but that's not the reason. The reason is the underlying cycles that are there. And that's the thing that we need to try to focus on. And the cycles are related to these patterns that we try to feel that we see. But remember, folks, the big pattern, what I think is the trade of the decade, and that's only 4 more years in this decade, is the Treasury bonds. No one in their right mind would sell Treasury bonds unless they were looking at the patterns that I'm looking at, and then they would do it. When you wanted to buy Treasury bonds, when they were making their bottoms back in 1981. When they were yielding 13% on a 30-year U.S. Treasury bond trading at 54. Now it's at 166. You couldn't get anybody to buy those things. And now it's a lot different story. Okay, that's what we're paying attention to. Someone's asked a question about Apple. Folks, Apple to me is an $85 stock. We've looked at this pattern several times. I don't see any reason why it's not going to go down there. But we have several ABCD patterns at that level, and that's what it looks like to me. Maybe it doesn't stop at 85, but it certainly has all the earmarks of an $85 stock. We've focused it several times in here about that. So that's the main thing that we want to be looking at. I've had a request to talk about the euro for just a second. I wanted to show the overnight pattern in the euro because we did go up and take out the high from June 8th. From June 8th, we dropped 300 handles. We made a 3 drive to a bottom where we took out the June low, and then what did we do? We took out the June high, and that's all we're doing is just bouncing around. That's all it is. 877-927-6648.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and someone's asked a question about Norm Winsky's view right now. I received some information from him last night that he sends out to his folks, and he's basically waiting until this vote is over, which is a sign that he is a professional trader, because you should wait until the vote is over and all the news is out. But by the time the news is out, you might not be able to react the way that you want to, but it's probably best to wait, because it's going to be a little crazy no matter what. At least we think it is. Maybe it's not going to be, but that's neither here nor there. Now, I've posted the chart of Apple that we were just talking about. As you can see here, folks, if you like ABCD patterns, this is about as clear as it gets with Apple over the past year. When the stock hit 131, everybody on Wall Street was bullish. There wasn't one single person that was bearish. They were all looking for a minimum of $180 to $200 per share, and now we're trading at half of 180, around 95. But the important thing is, if you look at the three distinct ABCD patterns that are facing you in Apple, it's really an important thing to realize that this thing wants to go to about 80, 81, 82, somewhere around in there. And it's a big factor in the NASDAQ, which has been far the weakest, which makes us wonder how high this thing can go, given the fact that you've got a drag on Apple. But that's what it looks like with Apple, 82, 83, 81, somewhere in that ballpark. As you get closer, you can, refine it better. But there are three major ABCDs that come in at $81 a share, between $81 and $83 a share. You can see them just as clear as a bell. They're just very symmetrical. Each of the BC swings are perfectly Fibonacci retracements, so all of that is very important as far as what we're looking at. Okay, that's Apple. Apple's down just a little today, not very much, just holding its own. Stocks are still up on the day, but selling off a tiny bit, if you can call 2 or 3 points a tiny bit. Bonds have held their low at 166.01. And we should have a rally coming off of that 61% retracement, but that doesn't mean it's going to. This is a big day as far as news, as we mentioned here, but people follow the news, and so that's what you have to live with. It's just like when the Federal Reserve is doing their thing. They have to get out there and they have to tell everybody what they're going. I mean, when Yellen was speaking yesterday, I only watched about 5 minutes of it because it helped put me to sleep. And I really couldn't understand what she was saying. I just some of the words I just they were just beyond. What was the one word she used? Can't remember. But anyway, I wrote it down. I left it over there. I have to figure out what it is. Okay, another question someone has is about the utility index. The same thing is happening in the utility index that we're happening with the rest of the market. If you look at the two major utility stocks that are Duke Energy and also Duke Energy is DUK, and then the other one is AXP, American Electric Power. Both of those gapped down from their proverbial butterfly patterns that were up there, so that's a really bad indication. Paul's asked a question about American Express. American Express still looks bearish to me. I don't know what it's doing this morning, but let's just double check it here to see what's going on, and we will see if we can find it there. AXP, and it is up. Oh, it's up a little bit today, up about $1, I guess, huh? I don't think it's going to get much above 63 and a half. All we're doing now is making a retracement off the high we made on the 20th. That's all I see happening there. We're up, let me see, we're up about not quite $1. With the rest of the market being strong, so that's just following through. I see the same thing with J.P. Morgan. That's another one that looks bearish to me also. But again, this could all change if we get some really craziness coming out. They already think it's going to fail or it's going to work. So the only surprise would be the other way. That it wouldn't work, and then that's when the real volatility would come in, is if this thing would actually come through as a negative vote. Then you'd have to have people who've been strategizing that it was going to be okay have to reevaluate themselves and go the other way. I remember back on the days at the Merck. We were trading Jenny Mays. No one really liked to trade them because T-bills is where the action was, but there was a pretty big pit, about 100 traders in Jenny Mays, and one of the guys that was the lead paper filler got an order to sell 1,000 Jenny Mays. And so he went in and he did the 1,000 Jenny Mays. The problem was his clerk wrote it on the wrong side. It should have been a buy of 1,000 Jenny Mays. Now he's reversed, and the market's already rallied about a half a point. So he's out about $500,000, and he has to reverse the trade again. So he's got to go in and not only get out of his shorts, but he's got to rebuy. So he's got to double the price or double the volume to 2,000. Anyway, he ended up making a $750,000 error that day because of his clerk. And the way that works is because these guys usually don't have that much of a bankroll. Some of the other traders that are there would bankroll him, but what they did to pay it back is they got to stand right next to him in the pit, so that when an order was coming in to fill, they got the best part of the fill. And when Jenny Mays are trading at 31.25 per point, as they were at the time, a person could buy 50 Jenny Mays, and over a period of time, it takes about probably 2 or 3 months to work off that $750,000 debt. But that's how they worked it off, and that's just doing business. But that's what happened, and it happened more than you might think, that those types of errors do happen. Now with these errors that we have now, these are fat fingered errors where somebody just hits the computer and leaves their hand on the button and away it goes, or they hit the wrong zero. Instead of hitting 10, they hit 100 or 1,000, and that's the problem. But we still have those also, but that's just part of doing business, the clerical part of it. But you don't hear about it very much, but that's what actually happened. So yeah, that's right. It's a big oops, Stuffy. I never had any of those. I had a couple of out trades when I first started trading, mainly because I didn't understand the operations in the pit. But I didn't like trading in the pit, so basically what I did was I stood on the side of the pit when it was time to trade, and if I saw the runners coming in, I knew there was going to be some buying or selling, and when there were no runners in there, the only place people you were trading against were the locals, and a few orders coming in flashing from the pit. So you had a big advantage from doing that, and that's basically what I did. I scalped using Fibonacci numbers in T-bills and gold and in the currencies, but I wasn't down on the floor all the time. I was only down there about a half an hour a day when these times would come up, where these prices would come up. Then I'd go down and take a look at it. The easy part was upstairs, and now you're a floor trader because you have all instant access. You can see everything clearly. I can follow 14, 15 markets without any problem at all by using limits and alerts and stuff like that. So those are the things that you want to keep. In mind is what we're doing in these things. Someone's asked a question also about long term on the stock market. Nothing's really changed. If we look at the Dow Jones, we're trading just a little above where we were just a few days ago. No breakout. We're still in this long term trading range between 18,000 and 17,600. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Finishing up the show here. And as I will reiterate again, what I know for sure is that there is a vote going on in London today, whether they're going to stay in the European Union or not. So we'll have that information in 5 hours and 6 minutes. No, let's try this again. 7 hours and 6 minutes, which will be 5 o'clock Eastern time. That'll be a pretty big event, would be my guess. And I will be up probably, depending upon the volatility, watching it. The gold, I believe, still has really good support here, 1262. If that fails, We're looking at the 61% retracement of 1255, where your stop would have to be a few dollars under that. So you'd be risking about $8 if you're long that gold from the 1262 level. We're now down about 13 points from the high in the S&P, making new lows on the session, but certainly not anywhere near new lows on the day. If we get below 2083, then would be down on the day. Then you'd be looking at a potential reversal, and then it would be rather relatively negative. The bonds are moving rapidly off the 61% retracement at 166.01. And we're trading 166.26. I fully expect them to get about a handle higher, 169, 168.7, 168 even to 169 over the next couple of days, because this is still viewed as a bull market by everyone, and it should have some pretty good support. But if we get below that 166 level, that is going to be another piece of information that this long-term bond market is tapioca. And that means it's getting ready to go. We come down 150 pips already, folks, in the British pound in the last 3 hours. Whether that's going to be the end of it, we'll have to wait and see. But we're starting to get some good volatility this morning, at least in the currencies, not so much so in the stocks, a little bit in bonds. So we're starting to get a little bit. And it's going to increase as we go through the rest of the month. Remember, the most important days coming up from a geometric standpoint, that means looking at patterns that have Fibonacci relationships, comes in on the 28th to the 30th of June. 877-927-6648. May God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.